You're watching today's video technical update presented by FX Times. It is Monday, April 12th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. This week started with gaps across the board. This was a result of a promise by the EU to bail out Greece if requested. Gaps themselves are not very informative, but where the position of the gap is and the subsequent reaction can give us clues to future direction of the market. Let's take a look at the euro dollar, dollar yen, euro pound, US dollar Canadian dollar, euro yen, and the pound yen pairs. This video is being produced at about 3:30 p.m. Eastern Time ahead of this Monday's US session close. We have many pairs to cover today, so I'll be rather quick. Here's the euro-dollar pair as we saw the market gap up today, and that gap actually gave us a bullish signal from the break of this declining trend line. Now that could be an implication of a bullish reversal, or it could be just an indication of further consolidation, which price action is reflecting. So there's a mixed message here, and we have to wait it out and see what the market decides in upcoming sessions. Looking at the 4-hour time frame, we see an important clue is whether the market closes this gap. Now the market doesn't have to close it right away. It could be a few more days, but there is an attempt at the moment, and if this attempt in the Asian and European session does close the gap, then the market remains in consolidation and is likely to just test this previous low here. And in the daily, we see if it tests this previous low, we basically have a channel, and we could wait for a channel breakout approach, whether it's bullish or bearish. The market right now is neutral with a slight bias to the bearish side, although the most recent price action suggests a bullish attempt, and we should wait to see if the market responds favorably to this bullish attempt by holding the gap as support. If you have been following the dollar Japanese yen analysis, we have a breakout here on the upside of this declining trend line, and also a possible breakout of this completed head and shoulders. And our next targets in the intermediate term may be here at the 101 level, but we may see some short-term resistance at 98. So ultimately the intermediate target is at 101. Now looking at price action to start the week, here's the daily. We see the market sort of finding a bottom here from this recent correction. So let's take a look at the 4-hour time frame, and we see the support right here near 93 and a declining resistance. So the market's converging and is likely to give us the direction very soon. The market did gap to start the week, as you see here, very small gap, but the market eventually closed that gap and actually immediately closed that gap. So that's a very bullish indication, and the market is already showing bullish implications in the higher time frame. So this 4-hour time frame bullish attempt is confirmation. Now the market still has to break above this declining trend line and also establish a low that's higher than this previous low, and we could have our confirmation for our bullish outlook towards first 98, then towards 101. Moving on now to the euro pound pair, which is very unclear what its outlook in the intermediate and long term is as the market converges within this triangle. So for those outlooks, you need to see a break of these resistance and support lines. However, we could anticipate some short-term action. Here we have a gap, so there's some bullish attempt in the very near term, but that rally is rejected from going above 88.50, 0.8850, which is a very important power line. As you see here, it was resistance and then support and then resistance, and now tested as resistance again. If the market doesn't go above 0.8850, it is likely to come in gap, close the gap here and test 0.8650. If the market, however, breaks above 0.8850, we have in the short term these power lines, first at 0.8910, 0.8920, and if that breaks, 0.9040 is the next short term target. Okay, so that's the euro pound in the short term. Here's the dollar Canadian dollar pair. As the market hovers above the parity level, and in the daily you can see a bullish divergence here. So despite being very bearish and despite the market continuing to be bearish, there are some signs of bullish reversal developing, but we have to continue monitoring that those clues. Here is the 4-hour time frame. We see that the opening gap in the market was pretty insignificant. It's been closed already, so that has no bearing on the future direction of this pair at the moment. What is important is this rising support and this declining trend line, resistance, and a breakout above or below may give indication of an outlook. However, the breakout below is points to a move to 0.90, and we see that 0.99, and we see in the weekly that the 0.94 area is actually a very important area, 0.94 or 0.9350 area. So if the market continues to break below 0.99, the next target could be 0.9350, 0.94. However, if the market breaks above this triangle, we may be testing this 78.6% retracement and our 200 period moving average just above the 1.02 level. So a break above goes to 1.02, break below suggests a test of 0.99, and possibly a break below that suggests a test of 0.94. Here's a look at the euro-yen pair. The euro did gap up, but now is rejected from going above this previous high here around 128, 128.50. So here in this time frame, daily time frame, we see that if the market continues to rally, a swing projection goes to about the 131 area. It should be testing this 200-day moving average as well as challenging this declining trend line. Here we see this in the daily time frame. Now in the 4-hour time frame, we see this gap still holding as support. So if the market rallies from this gap without closing it and breaks above this previous high here at 127.50, then the market may continue to test 131. So a break above suggests a rally towards 131. A break below, however, just means that we are continuing in this consolidation, and we should, here in the daily, we should draw trend lines to project a breakout. You see, if the market continues and closes the gap, then we are in this congestion pattern, and we have to wait for a breakout either above or below. A breakout above, since the market is bearish, has a limited or short-term outlook, while a break below has a short-term outlook as well as an intermediate-term outlook, as we could see here. If the market breaks below, let's clear that. There's some further way to go towards the 118 area in the intermediate term, 118.20 area. Now for the bullish outlook, if the market breaks above and actually breaks above this declining trend line, and if it's able to establish a low above this or above this previous low actually, then a rally towards this area is possible. Towards here, this previous high here at 78.6%, which is 134.50. So if the market does have the swing rally and establishes a low above this previous low, above this previous low at 124, then the market could rally to 131.50. Finally, the pound-yen pair. Here, price action shows continuing consolidation. Here's a 4-hour time frame. We see this gap closed immediately, just like last week. We had a gap upwards, closed immediately, which suggests decline, another swing of decline, and that may be testing this previous support, or an extended decline should test this previous support here at 138.50, which has a coincidence of this 200 moving average and rising support line. Looking at the daily, that's right here, 138.50, and you can see why that's important. If the market breaks below that and this rising support line, the market is likely to test this previous low at 133, 132. If the market, however, continues to rally, we do have resistance. See, the market is bearish, so we have to have a very short-term outlook for the bearish case, and that would be to the 147 area to test this 200-day moving average. So that's both the bullish and the bearish outlook for the pound yen. And that's all for today. Check out fxtimes.com for other technical and fundamental analysis as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.